Good afternoon, Scott Relati TV Live. Welcome to today's recap. It's Wednesday. The day started out very, very gloomy. Europe in the hole, Asia weak. Our futures are down 8-9 points, and it seems like the opposite happened off the open, which at least made a little bit of sense. The first 30 minutes or so feels like the most calculated in my opinion because you have daily charts to look at. You know what's been strongest. You know where prior day pivots are, and with the SPX we knew where yesterday's low was, and we were opening below it. So once we got above it, if you were short, you had to cover, and if you were looking for a long, that was probably the quickest because you had shorts cover and some bottom feeders come in, and then, by sometime midday, the top was in, and then nothing transpired thereafter, and things that made their high already did it, and some things fell apart, and you had to be in the exact right names at the exact right time and be sort of perfect. And I will tell you, I am not perfect. Far from. I try and be consistent, but lately it's been hard to even be that. So you look at the chart of the SPX, you will see that here's when we broke the 8 and 21 day, which happened to be right around 1970. This is when we sliced through the 50-day, and since then we've been in this lower range where it's been very choppy. Red day, green day, red day, green day. But at least the range is being put in. What we did is hold the 50-day this morning, which is a level, okay, and never really made it down to a level that could have been a bit more exciting, but who knows? It's still only like August 6th. We have a big month ahead of us, a long month ahead of us. Anyway, with that being said, you go to the 5-minute, we like things when they move fast. So this is what happened in the beginning of the day. The SPX opened lower, so you did have your quick move, which is where I think a lot of us made some money. And then you had it hold higher. This is where I think at least if you missed this move, that was your move to kind of get ready and situated for. And that's when I put on the spiders and had a pretty nice trade back to resistance. But then if you tried it a few more times, it got hurt. If you tried it here, it failed, came down. Tried it here, it didn't have much traction. And then PS, nothing really took place into the close. So this was your calculated trade. This was your fill the gap, hold higher, and extend. And within that, that push back into the range in the S&P, you had your stocks that we look at that have been strong. Some of them had better moves than others. You look at Tesla, unbelievable stock, trading very well. This was actually your 5-minute chart. So I guess we'll look at that first. Here was that, first move into that key level, which was around 243.50, 244. Went fast like Tesla does, and then it hovered here, and then from 244, you had a 6-point move. So if you were in Tesla, which has been a relatively strong stock, you got paid, okay? Because this was a nice bull flag breakout, and it did it on the daily above this prior resistance, which was 244-ish, 244.50. It closed a little off the highs, but this one's above the 8 and the 21 day, all the moving averages, and it had some volume. Next spot here would be, I guess, 265. So don't be just trying to short this name because it's the high valuation name. It's been acting very well on earnings that popped up. Netflix also gave you a nice trade. Okay, this one, get some of this noise out of the way. We were talking about 430. Okay, which was a key level of 428. This one got really tight. This red dog reversal happened here, so that squeezed some shorts, and then it was going sideways, and then you had a little trade here, an intraday trade. This level here was what, 428-ish, and then you had 430. And I know you had to be basically perfect though, because when it broke above, held, went as high as 435, so a $5 trade. Okay, and this was strong early. So if you were looking at Netflix that was holding in decent, that's how you had your early morning trade, and then it just kind of drifted lower. It's almost better if it would stop here at 2 o'clock and then at 4 o'clock close there versus knowing where the top of the morning, the afternoon's going to be before coming in. It did trade, or I guess it broke this small little area right there, which if you were trading it for momentum, maybe you get out right there and you'll wait to see what happens tomorrow. So Netflix, which failed right here, that was your earnings level, is acting somewhat well within this corrective phase. Google not acting well, but went green. Held the pivot, so it went back above the 570 low and gave you a trade here if you were looking for a trade in Google. Still held going sideways. Let's see what Baidu did. Baidu, I think, went green also. Went green. It's just building a base. It's still above its earnings area, so it's, it's holding it okay. It's still above the gap, above the 8 and 21 days, so that's stronger. But then I guess two of the names that became frustrating to me that I focused on was, Facebook and Twitter. Both of them, good earnings gaps, and they've been go-to names. They both went from negative to positive. Okay, Facebook being stronger. But you look at Facebook, and this hurts a little bit, right? It tried to get through an area where if you added here, which you can't add on any strength in this market now, 73.60, what was it? Over $1 lower. So that's not that, that's just not that healthy. Let me get rid of some of these lines here. Sorry for this e-signal. This one was from a few days ago. But, it's still, you could say it's still holding, the earnings gap. It's still in this range. It's just a choppy mess. It did take off in the first 5 minutes, which was nice. Look at that. Pow, that was awesome. I was in it too. I was in it for this, then it flagged, and then, thank goodness I didn't buy it up here, because I did that the other day and it hurt. But if you didn't, respect this rising channel, okay, and said, okay, I'm going to sit in it, and I just added here, and then maybe you said, okay, now I'm going to add here because, it had a nice, a decent pull in, and maybe you're like, oh, I just chased it, let me just figure it out, so I'm not going to sell it there, I'm going to add here. That was like 73.26. This great trade, if you didn't take it, turned into a bleed. Bleed, 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 bleed. And then I think it closed, here. So that just is horrendous. I guess, you want to use your retracement rules. This should have been your out. If you were really quick, you saw this breakout failure in this wide range bar and you said, oh, I bought it wrong, let me get out. Or you bought it here and said, look at this wide range bar engulfing this, let me get out. Or you did it here. But if you said, okay, Facebook's been strong, it's a little bit whippy, I'm going to give it some space, this is what wound up happening. And now it's back to being a little bit sloppy. We don't like sloppy, we like clean cut, and there's not a lot of clean cut in this market. Twitter also became very sloppy today. I look at it now on this chart and it still looks fine. It actually touched the 8-day and it took a little bit of time. Yesterday there was a clean trade, a clean negative to positive. It just wasn't ready to break above this again. But if you look at how it did it, I guess I'm looking at it from a day trading standpoint, which a lot of us do. Okay, this too started lower. Let's go to the East Coast, so you don't see all that other. Let's see, solid templates. Let's go East Coast. So this was calculated here. Open lower. Facebook started getting really strong. It held in there. I know that's when I started buying Twitter. We saw that divergence. I added, made some money, came up to here. The only thing I did kind of right was I didn't add on this one. And then lo and behold, this was like 12 o'clock. I held it. I said, you know what? Let me just give it some space. And then I think I put a stop in. Where did I put a stop in? Somewhere around, I think here. This was my, and then boom, got stopped out, came back up, and then, slowly trickled lower. So there was a calculated trade here. So this like you have to go to your active trader course that we have, and you look at the 5-minute candles, and here was your close above, this 30-minute range, and that was your trade, and then you just had to get out of the way and not look for more. So that, I guess, could be part of a change, is don't look for more when you're in August and you're in a lower range. Take what you can get, but that's hard to do too. So there's a lot of hard things going on in this market. There's trades and there's money to be made, but if you're not perfect, which all of us aren't, there's only a few guys on Twitter who I'm sure call themselves perfect. Anyway, you know who those guys are without naming names. So that's that. It's funny, gold, finally everyone started, saying, oh, inflation's not here, gold's done, and gold finally had a gap up and held, and you look at that gap up. So you had to be in it overnight, which was hard to see, right? You look here, not much telling you, let's move this over, not much telling you to be in this overnight, right? It's in this range, it's below the moving averages. I guess just, thinking maybe Russia goes in, and you have a descending channel here, so usually descending channels break to the upside. That's the only reason why I talk about it in the morning call, because I figure something's going to happen, and now, boom, there's your gap up. But if you try to buy it after the gap up, go back to the 5-minute chart, because you weren't in it, you have to hold it overnight because you bought it here and it gave you absolutely no follow-through intraday. it only gapped up and actually traded off the highs. So now you have to sit in it, and we all know what happens with gold sitting in it. After a move, you don't get such a calculated one, but we'll see what happens. You now have a gap to trade against, which is 125. What is that? 52. See if that holds up. There were some numbers out overnight, the Macau numbers of softness, and the casinos got hit really hard today. LVS, I talked this morning, or I had it in my morning notes, saying that it broke below the 200-day. It's not going to go. It's in a void. And I guess if you shorted it, congratulations, you made some money. It's below the moving averages, and it was never able to break the downtrend. I like to look at it the long side, not the short side, but at least I'm not in it. And this little bar yesterday told you, be careful. You look at Wynn also, was a little harder to tell, but I know on this day it looked good, right? This looks kind of good. Here was your earnings move, okay, stalled here, giving you a little go-to status, pulled in a little further than you would have wanted to, and then you had a nice little green bar there. So if you were in it, okay, but then what happened the next day? A red bar matched it. Okay, red bar matching the green bar is telling you, this isn't ready, be a little bit careful. So hopefully you were a little careful, because that shouldn't happen. It should have held the top end of this, or maybe increased a little bit more instead of that. And now, now it's in jeopardy of breaking this whole area just the same way LVS did. It just hasn't done it yet. So be careful if you're just sitting in that. I think MGM, has numbers soon too. And now this is broken. Look, there's a lot of broken groups. What's Coca-Cola doing? First up day in a while after being broken. What's McDonald's doing? Wow, look at McDonald's. Jeez. At some point, buying McDonald's, has worked for the past decade. It probably will do it again, but at this point it's below every moving average, and it's just very oversold. You look at something like RIG too. Like, look how fast risk happens. Boom, below the 200-day. You don't touch things below 200 days. It has earnings. We'll see what happens there. GMCR was out after the close. People weren't really playing this for good earnings. They were more or less playing this for Coca-Cola taking them over. And I know that I had calls in here a few different times when it looked good, and I was like, I think it happens, and went expired on me twice worthless, so I'm away from it, and then they came out with decent numbers, and I think next quarter wasn't great, and now it's lower after hours, so that takes that out of the way. The banks started the day off strong. That's why I went into the spiders and went to the XLF, because Bank of America was supposed to settle, and that was up first. I figured it would pull the banks. Maybe we can sold squeeze, but the banks basically put their highs in the first hour, and they too just dribbled lower. And if you tried to buy a dip there, it was frustrating. And then I think 5 minutes before the close, I think they're settling with 16, 17 billion, which is a huge number. I think they were supposed to do 8 billion. I remember that whole time sequence when Bank of America took over Countrywide. I think they, when Countrywide was in trouble, they did like a secondary, gave them 1.5 billion, and then they still had all those shoddy loans. And instead of taking the 1.5 billion dollar loss, I think they bought them for 4 billion, and it's cost them 30, if not more, whatever. Merrill Lynch was shoved down their neck by the feds, but whatever. That's just a whole other ball of wax. So whatever. We'll see what happens with Bank of America tomorrow. It's a big number, but maybe all of it's behind them now, and that would be a clue for the market if we're oversold enough to rally. If they rally on that news, maybe we try to navigate up from this lower range. If for some reason the banks become weak again, then chances are this pivot area of 1911 to 1913 doesn't hold. FSLR was interesting, right? Down. At first, when I looked at it, it looked like the earnings weren't enough. It was down and down $2, and then all of a sudden engulfed this entire, spot. So that at least puts this back in the map. There are some, high beta names that are trying to build patterns for us to go to when, the market's conducive for that. And again, I think that's Tesla, which is breaking out near old highs. I think Netflix is acting better than some others. Now you have First Solar that kind of put itself back in the game. Then you have Solar City, which is numbers tomorrow. Looks like it's ready to clear this 75. Apple goes ex-dividend tomorrow. It was very just like out of play today. It's a little bit below this trend line. We'll see what happens tomorrow. Don't know why it was so weak today. There was some big options trades which people were talking about, but I don't know enough about it to get into it. All I know is here is your lower level. It's probably going to adjust for that with the dividend. but that's 94.30, 20, what is it, 94.36. At some point, if it gets above here, maybe it could start acting better like it did when it went above this lower pivot. So we shall see. At this point, it's just really a no trade, but it is hanging out better than most of the spots in the market. So I guess we'll take note there. I do think this is not the highs of the year, but we'll see when it wants to wake itself up. And that's really it. You know, it's August 6th. I found myself today a little bit on tilt as some things I wanted to do, I didn't do, and they worked out. Some things I was in that I had good profits in, I lost money and then overtraded the spiders. And some days, what'd say? Mama said there'd be days like this. Well, it was one of those days. And I guess it could always be worse. But, you know, at this point, don't let a lot of days like this get you frustrated, get you down, because again, it's August, it's beautiful out. Go to the beach if you're losing money at your desk. There's always going to be a market, you know, come in the fall when things are more conducive. I can't say with confidence the summer low is in, but shorting here hasn't been that easy either. Lots of sectors are already broken. You have the DAX that's down 10% off the highs. That actually looks like it's ready to rally a little bit tomorrow, first green day. Look how extended it is from all the moving averages. So some guys have been accumulating calls in this area. If the ECB wants to do some kind of QE, maybe that'll be a catalyst for tomorrow. I did come out with a note saying at least cover your shorts in Germany. I don't know about getting long, but you know it could bounce back considering where it came from. But you know at least technically you had some signs. The first sign was this breakout failure right there. Granted, it happened overnight, but you know it did rally back up, retest, not fill the gap, and then head lower. And then if you didn't get out there, you could have got out when it broke the 200-day and stayed below it, and maybe given it a try here. So there's spots to navigate these type of things. Remember, if you want to simplify it, if you trade for momentum, if you come back to me and you trade for alpha, use the 8 and 21-day moving average, and most sectors are all below it. If you sell when the 8 and 21-day breaks, kind of like the S&P or the SPX when it broke 1970, then you could try buying back in 1911 or 1920, 50 handles below, because you didn't take that pain down and maybe you made some money short. You know, you're not upset if we go to the 150-day or the 200-day because you reduced risk then. But if you just hold your nose and go underwater and you don't respect levels and you have opinions, chances are you're caught in these things, and you know these type of headlines could get you really scared. Don't get scared, get prepared. Ah, that's a new one. Right, Parker? Don't get scared, get prepared. See you tomorrow.